Welcome, ladies and gentlemen, to another edition of Capital Concepts Video. I am Jeff Schuler. I am the Director of Research and Chief Analyst for Spiker Consultants. Talking today about two things, oil and palladium. Now, I've said recently how I feel about both, that I think both are getting ready to break out, and palladium's already started its run. I mean, what's going on in palladium right now is nothing short of amazing, and I've said it's such a thinly traded metal that when it goes, it goes. It's up another $8 an ounce today. It's a 326 bid London spot, offering around 331 depending upon where you pick up the metal. Oil is up as well. We've got London Brent crude up 71.06, and we've got West Texas Intermediate 73.66. When I started with the clips and the audio just a couple weeks ago, oil was $64 to $65 a barrel. This is just the beginning. I hear a lot of people wondering, is this where it peaks? Is it peaking too early? Just to start. There's a number of reasons for it. We're going to talk about a couple of those. I recommend very highly that you not procrastinate. If you are an investor and you're in a position to do something, get the information, learn about it, and do it. Now, some people don't understand that you actually can buy. You can invest directly in oil. You do not need ETFs. You don't need stocks. You don't need paper. You can invest directly in oil. Yes, you can. We can do it. If you'd like to learn about it and how we do it, where it's stored, the whole 9 yards, give us a call. Right down at the bottom of the screen you see our email address. Go there, get it, get in touch with me, we'll move forward. But right now we have a number of things going on, and oil and palladium tend to go hand in hand. Something else a lot of people don't know. Russia is by and large the controlling factor in the prices of palladium. They're about 2/3 of the world's supply. They are pushing prices up by driving the supply down. Their largest mines are cutting back on what they're developing and shipping overseas. They're holding their domestic production pretty much even. The last time we had this situation was 2001. Palladium went to $1,075 an ounce. We also buy palladium for our clients directly into the metal itself. Now, we can enhance the purchase. We can leverage it, we can use financing, we can get you a bigger bang for your buck. Depends upon the individual and how you want your investments handled. But using our programs on the most aggressive way that we'd work, you're still looking at 30, 40, 50% of your money or more, way more. If it goes back, forget 1,075, just goes back to the mid-500s. It was 582 last year. We're talking multiple returns on your money. With oil, 125, 130, starting with the multiple returns on your money. Now, I talked on the radio program this morning with oil about what causes it to really make its move. Now, fundamentals, the actual just buying and selling, is going to move it up to about the $95 to $100 a barrel range. What pushes it beyond that is what it did last time. What caused it to run up to 147.50, which could cause it to rise even farther than that. If half the analysts out there right now that are bulls on oil are right, they're looking at $175, $180, $200. Speculators. That's where the option traders come in. That's where all the paper trading comes in. That's what pushed that bubble so high. Could it happen again? You better believe it. But bottom line fundamentals, supply and demand, we're looking at $95 to $100 a barrel. Now, you say, but Jeff, we've got big stockpiles. We have economies. You said it, Jeff. You said we've got a depression. We've got less vibrant economies. We have less vibrant economies in the U.S. and in Europe, but we have more vibrant ones with half the world's population in China and India. And are they dependent upon us to buy their product? Yes. Will they be? No. That's a dynamic that's not being understood or being ignored. On top of that, there's another dynamic for oil right now that did not exist 2 years ago. Oil is being used as an investment vehicle, akin to gold, where large institutions and governments are buying stockpiles not for the purpose of using it in the future, but for the purpose of hedging their own bets against declining currencies. Same reason that we buy and hoard gold, to protect themselves against declining values of currencies. When you add the speculator to that, sky's the limit, ladies and gentlemen. Learn how to get involved. Palladium, one of the reasons it goes hand in hand with petroleum is you cannot develop petroleum, you cannot refine petroleum into gasoline and jet fuel without the use of one of the platinum group of metals, platinum, palladium, or rhodium. Rhodium's $1,800 an ounce, you can't get it. Platinum's $13.50. Palladium, still at $3.25, $3.30, it's still cheap. All goes hand in hand. It makes too much sense. There is so much going on in the palladium market, I can't talk about it in 5 or 10 minutes. Suffice it to say that right now on a short-term basis, palladium is an extraordinary opportunity. Even with the recent move of $25, $30 an ounce, it's still a tremendous opportunity. It's just beginning. The same thing with oil. Now, in the next clip, the next thing we talk about, we're going to talk about gold, but we're going to talk about my favorite, the best long-term investment that I think we've had in our entire lifetimes, and that is silver. Ladies and gentlemen, I hope you enjoyed this little presentation. I hope you have an absolutely fantastic day. Until the next time we talk, may God bless you all.